Tax Minute. This is Tony Novak here to share a few points on how to stay out of tax trouble. Let's jump right in. Today's topic is corporations owning real estate. Should a corporation own real estate? If you Google the topic or you've been involved in any real estate clubs or groups, you've probably heard the comment that corporations should not be used to own real estate. And like anything in tax law, it's never a simple black and white. So I'm going to give the general reason as to why corporations generally are not the best choice to own real estate, and then give at least one example of when that's the opposite is true. So with real estate, one of the two of the key advantages of real estate is that sometimes when we sell it, we don't have to pay any tax on the increase in value of that real estate. One of those examples, probably the most common, is when you sell your primary home. We have a exclusion amount, which can be up to $500,000 for a married couple, and that's nothing to ignore as far as tax planning. We're talking about a tax savings of over $100,000 if that exclusion is used appropriately. So obviously we want to pay attention. Another huge consideration for real estate is that when we inherit real estate, when the owner passes it on through death at an estate, we get a step up in basis. That means that there is, in other words, if I inherit a parent's home or investment property or building, but I had heard that I pay, not only do I not pay any tax on receiving it, but my cost basis is bumped up to the value that it was on the date of death of the person who owned it. That is a huge advantage in tax planning. The simple issue with corporations is that corporations do not get that advantage of bump up in basis. So for that reason alone is usually enough. Now there are half a dozen other reasons, and you can read about them online, but that's a big enough reason in its own to not hold real estate in a corporate name. I mentioned that I'm going to give one example of when that's not true and the opposite. When real estate is used as part of an active small business, and that small business is a corporation, the sale of the stock of that corporation can be completely 100% exempt from tax. So in many small businesses that in my rural area where the property is used, whether it's a shop, in my case, I happen to own a marina, fishery business, that real estate is part of the business, essential to the business. And whoever buys that marina or fishery business is going to get the real estate, and I'm going to pay no tax on that qualified small business stock sale. So that's an exception. All right. Thanks for showing up today. If you like what you saw, please share this post. And if there's a topic that you'd like to see covered in a future episode, I invite you to just send me a message with that topic, and we'll cover it on a future episode. Join me here tomorrow for another Tax Minute.